All right. So are those Berkshire Hathaway shares, the BRK.B shares, are they a good fit for your portfolio? That's what we're diving into today.
It's a big question, right?
It is a big question. And we're talking about potentially getting a piece of a company that owns so many businesses. I mean, think about it. Jaico, Duracell batteries, even Dairy Queen.
It's really a fascinating company. I mean, it's almost like Warren Buffett's, personal investment portfolio, but it's public. And
Yeah.
despite its size, it's the ninth most valuable company in the
Yeah.
world with a market cap of $1.04 trillion. Those Class B shares, though, make it pretty accessible. If you don't have $657,000 lying around for a single Class A share.
Yeah, there's definitely a price difference there.
Right.
But speaking of those Class A shares, it's kind of interesting that Buffett doesn't like to split them.
Right.
It seems like he's really trying to attract a specific type of investor, someone who's in it for the long haul.
Yeah, definitely. Someone who is not looking for a quick buck.
Exactly. And that long-term perspective, I think, is super important when we're talking about Berkshire Hathaway and how it performs. I mean, yeah, the market cap is really impressive, but we need to look deeper, right?
Absolutely. It's not just about that one number. We need to look at their holdings and how they performed, over a longer period of time.
Right. And diverse really is the key word. We're not talking about some tech giant or a company that just dominates a single industry. Berkshire Hathaway is a conglomerate with holdings everywhere: insurance, utilities, manufacturing, consumer goods. They even own railroads.
It's true, yeah. Think about it. You could have Geico insuring your car, Duracell powering all your devices, grabbing a Dairy Queen Blizzard when you want something sweet, and all the while, BNSF Railways transporting goods all across the country. It's all under the Berkshire Hathaway umbrella.
Yeah, that's a ton of different businesses. But would you say that when they acquire a business, they tend to go for those well-established companies rather than those new up-and-coming innovators we see in tech and other high-growth sectors?
Yeah, I think you're right. Buffett has always focused on getting steady cash flow from companies that are already mature rather than, going for those super high growth but also risky companies. Now, whether that's good or bad for you as an investor, that depends on, your appetite for risk and what you want to achieve with your investments.
That makes total sense. So if you're someone who likes slow and steady growth, this might be the way to go. But if you are okay with a bit more of a roller coaster, volatility in the market, then maybe not so much. But how do you even put a price tag on something like Berkshire Hathaway? It's so complex, right? I mean, from the research
Yeah.
we've done, valuing Berkshire Hathaway isn't straightforward at all.
It's really challenging. It's a very unique challenge because you have those publicly traded stocks in their portfolio, which are easier to value. But then you have all those privately held businesses. It's like trying to solve a puzzle where you're missing some pieces.
Yeah, it's tough. It's like trying to compare apples and oranges, or maybe even apples and a whole fruit basket. I don't know. But the sources that we have, they offer a few different ways to kind of, tackle this valuation problem.
Yeah, one way is to look at those price to earnings ratios for their entire portfolio. This gives you an idea of how the market sees their potential for earnings.
Okay.
And another way is to, break down their assets by what percentage of the market cap they represent, which basically shows you which holdings are the most important for their overall value.
Interesting. And speaking of assets, we can't forget about their recent purchase of Allegheny Corporation, a major player in the insurance world. They spent $11.6 billion on that acquisition.
Yeah, that was a big move. I think that really shows how they are trying to be even stronger in the insurance sector, which has always been a really important part of Buffett's investment strategy.
They really seem to be sticking to their strengths there.
Yeah.
But they're also expanding into other areas like those service-based businesses with their ownership of Home Services of America.
That's right. And home services is a major player in the real estate world, the brokerage industry. So this shows how they're trying to diversify, moving beyond those industrial holdings and getting into a wider range of service businesses.
Okay, so we've talked about how big and diverse they are,
Hmm.
but what about their impact? I mean, with all those companies and employees, they must have a pretty big influence on the U.S. economy.
Oh, for sure. Their operations touch so many industries that they're a major force in both employment and economic activity throughout the country.
Yeah.
Yeah, their impact is huge. But let's get back to, the original question. Should you buy BRKB for your own portfolio?
Uh-huh.
On the plus side, you could see stable growth over the long term. And of course, you've got that super diversified portfolio we were just talking about. And then there's the, what do they call it? The Buffett factor.
Right.
A lot of investors just trust his decisions.
I can see why. but they don't pay dividends. For some investors, those regular payouts are really important.
Yeah, and that's a fair point, but I think it's key to understand why they have that policy. Buffett really believes that it's better for the shareholders, in the long run, if they reinvest profits back into the company. So instead of paying dividends, they just focus on making the company itself more valuable.
So you're basically betting on the company's success, hoping that your shares will just become worth more over time. It's asking a lot, don't you think?
It definitely requires, thinking long term, and it's not only about dividends. Their whole investment strategy is very conservative.
Right.
I mean, they're not chasing after the latest tech trends or anything like that, and they're not making risky bets on, up and coming markets.
Uh-huh.
This can provide stability for sure, but it might not give you the same kind of explosive growth that you see with some other investments.
Right. It's that classic risk versus reward scenario. And you mentioned the Buffett factor, but what happens when he's not around anymore?
Right.
That's a big question mark hanging over the company.
Yeah, there's no way to know for sure what will happen when Buffett is gone. I mean, will his successor be able to do as well as he has? Will they even stick with the same investment philosophy? These are all things that potential investors really need to think about.
It's a lot to consider. So we've been talking about long-term stuff, but let's talk about the two types of shares they have. For most people, those Class A shares are just too expensive. They're just out of reach.
Yeah.
But what about Class B shares? What are you really getting with those?
Well, you're getting a piece of Berkshire Hathaway, but there are some key differences.
Okay.
Obviously, the price is the biggest one. Like, as of July 26th of this year, Class A shares closed at a crazy $657,180, but Class B shares were only 437.66.
So yeah, Class B is much more accessible for the average investor. But
Right.
what about voting rights? If I own a Class B share, does my vote count as much?
Not really. Class A shares have a lot more voting power than the Class B share.
Okay.
So if you really want to have a say in how Berkshire Hathaway is run, Class A is the way to go. But for most people, it's more about the potential returns.
Right. So did the two types of shares have different returns?
The returns are basically tied to how well Berkshire Hathaway does as a whole. Both classes of shares will go up or down depending on the company's overall success. But there's one more thing to think about. You can convert Class A shares into Class B shares anytime you want.
Oh, interesting. So if you needed some cash but didn't want to sell all your shares,
Mhm.
you could just convert some of those really expensive Class A shares into smaller, more manageable Class B shares.
Exactly. It gives you some flexibility.
Okay.
But you can't go the other way around. You can't convert Class B to Class A.
Got it. So to recap, we've got this huge company that's involved in almost every industry you can think of. They have this unusual investment philosophy that prioritizes steady, long-term growth. And then, of course, you have Warren Buffett's reputation.
And we've talked about the pros and cons of buying those BRK.B shares. They don't pay dividends, and their conservative approach may not be for everyone. But on the other hand, there's that potential for stability, diversification, and, that Buffett factor.
Right. And we talked about the two different share classes, those super expensive Class A shares and the much more affordable Class B option.
Definitely. It's a lot to think about.
It is. But before we decide whether or not Berkshire Hathaway is a good fit for your portfolio, I want to talk about something we haven't mentioned yet. What about all those environmental, social, and governance factors? Those ESG considerations that a lot of investors are focusing on these days.
That's a really good point. Trying to figure out the ESG factors for a company like Berkshire Hathaway is tough because they own so many different types of businesses.
Yeah, it's not like we're looking at a single company with a specific mission.
Right.
They have everything from energy companies to, ice cream shops. So where do you even start?
It's not easy, that's for sure. But if ESG is really important to you, I'd suggest taking a closer look at the individual companies within Berkshire Hathaway's portfolio.
So you're saying do some extra research and focus on the companies that match your own values.
Exactly. Don't just look at the whole conglomerate. Look at the individual companies and see if their ESG performance is up to your standards.
Great tip. All right, so we've covered a lot today. Their financial performance, their market share, how they acquire companies, the pros and cons of owning their stock, and even those ESG considerations. But the big question remains, is Berkshire Hathaway right for your portfolio?
That's the million-dollar question, isn't it? And like with most things in investing, there's no simple answer.
It's not a one-size-fits-all situation.
Exactly. But let's try to help our listeners make a decision. From all this information, what are the main takeaways for you?
For me, it's realizing that investing in Berkshire Hathaway is kind of like investing in a mutual fund that Warren Buffett created himself. You're basically investing in his knowledge, his experience, and this portfolio of really diverse and well-established businesses.
Yeah, and that could be a really good thing if you like his long-term value-focused approach. But if you're looking for fast growth or regular dividends, it might not be the right choice.
And we have to remember that Buffett won't be around forever. Whoever replaces him will have a tough job, and that uncertainty just makes the decision even harder.
Yeah, you're right. It's not just about the numbers and the companies, it's also about the leadership and the strategy.
So as we're wrapping up our deep dive into Berkshire Hathaway, what's the last thought you want to leave our listeners with?
I'd say don't let the size and complexity of Berkshire Hathaway scare you away. Just take some time to really understand their investment philosophy, what they own, and how they've performed, and then compare that to your own goals, your risk tolerance, and how long you plan to invest.
All right, so before we wrap things up with Berkshire Hathaway, you mentioned something about a tax advantage when you gift Class B shares. I think that's worth looking into.
Yeah, it's a pretty interesting detail, especially if you're thinking about, passing on some wealth to family or friends. You know about those gift taxes, right? The ones that come up when you give someone a lot of assets.
Yeah, you're talking about that annual gift tax exclusion. I think it's like $18,000 per person per year. If you go over that, you could end up owing a lot in taxes.
Exactly. And that's where the lower price of those Class B shares can be really helpful. Because they're a lot cheaper than the Class A shares, you could potentially give someone more Berkshire Hathaway stock without going over that $18,000 limit.
Oh, I see what you mean. So it's like a smart way to give a bigger gift while still, keeping your taxes lower.
Exactly. It's something that might make those Class B shares really appealing for folks who want to, be strategic about passing on their wealth as part of their financial plan.
That's a really good point, and honestly, something I hadn't even thought about. It shows how those little differences between the share classes can really make a difference in your financial decisions, even beyond just the initial investment.
For sure. And it really highlights why it's so important to do your research, dig into the details and think about everything before you make any investment decisions.
Totally agree. Well, I think we've reached the end of our deep dives into the world of Berkshire Hathaway.
We covered a lot, their unique structure, their diverse holdings, their really impressive track record, the pros and cons of owning their stock, and of course, the Warren Buffett factor.
And we spent some time talking about those differences between the Class A and Class B shares and how those differences might influence an investor's choice depending on, their own personal situation and goals.
Right. But in the end, the most important thing for our listeners to remember is that there's no right or wrong answer when it comes to investing.
Each investor's situation is unique.
Absolutely. Whether Berkshire Hathaway is a good fit for you depends entirely on your own financial goals, how much risk you're comfortable with, and how long you're planning to invest your money.
So take what you've learned today and use it to do your own research and make your own decisions.
And remember, even if you decide Berkshire Hathaway isn't right for you, you can still learn a lot from studying how successful investors like Warren Buffett do things.
Yeah, we can all learn something from the Oracle of Omaha.
Definitely.
Well, I think it's time to wrap up this deep dive. Thanks for joining us today. Until next time, keep learning, keep exploring, and keep diving deep into the world of finance.